Did you know that some of the world's richest people, including billionaires, use debt strategically to grow their wealth instead of avoiding it? While most people fear debt, the wealthy see it as a powerful tool that can multiply their financial success. They don't just borrow money, they use it wisely, leveraging it to invest, expand businesses, and reduce tax burdens. Debt is often seen as a financial burden, something to be avoided at all costs. But think about it. What if debt could actually work in your favor? The truth is, not all debt is bad. While some types can drag you down financially, others can be powerful tools for building wealth. Bad debt is the kind that keeps you stuck in a cycle of repayment without any financial gain. This includes credit card debt for luxury items, high-interest loans for unnecessary expenses, or personal loans used for consumption. These debts don't generate income or appreciate in value. They only drain your finances. On the other hand, good debt is how the wealthy grow their money. Instead of borrowing to spend, they borrow to invest. They take out low-interest loans to buy real estate, expand businesses, or invest in stocks, assets that increase in value and generate income over time. So, in today's video, you will know how exactly do the wealthy use debt to build wealth, and what strategies do they follow. Stick around to explore. Wealthy individuals don't use debt recklessly. They use it strategically to create opportunities for greater financial gain. Here are some of the most common ways they do it. Real estate. Using debt to build property empires. Real estate is one of the smartest ways the wealthy use debt to grow their fortune. Instead of paying cash for a property, they use a mortgage to buy it, allowing them to own multiple properties without locking up all their money. Think of it this way. A wealthy investor wants to buy a $1 million apartment building. Instead of paying the full amount up front, they invest just $200,000 of their own money and take a loan for the remaining $800,000. Now they own a $1 million property while keeping most of their cash free for other investments. Here's where the magic happens. The rental income from tenants helps cover the loan payments, and over time, the property's value increases. That means the investor's wealth grows, not just from rent, but also from appreciation, all while using borrowed money to make it happen. This is why real estate is a game changer. The wealthy don't just buy properties, they leverage debt to build empires. Investing in the stock market with margin loans. The wealthy don't just invest in stocks, they use debt to maximize their returns. One of their favorite strategies is using margin loans, which allow them to borrow money against their existing stock portfolio to buy even more stocks. Here's how it works. Imagine an investor owns $500,000 worth of stocks. Instead of only using their own money to invest more, they take a margin loan and borrow an additional $250,000 at a low interest rate. Now they have $750,000 invested in the market instead of just $500,000. If the stock market rises by 10%, their gains aren't just based on the original $500,000. They also profit from the extra $250,000 they borrowed. This means their returns grow much faster than if they had only used their own cash. Of course, margin investing comes with risks, but when it's used wisely, it's a powerful way the wealthy accelerate their wealth-building journey. And not only this, but the third way the wealthy use debt is even more powerful. It's a strategy that can minimize taxes and build wealth faster than most people realize. Curious to know what it is? Keep watching. The buy, borrow, die strategy, minimizing taxes. One of the most well-known strategies of the wealthy is buy, borrow, die, which helps them grow wealth while avoiding large tax bills. Here's how it works. Buy. They acquire valuable assets like real estate, stocks, or businesses. Borrow. Instead of selling their assets and paying capital gains taxes, they take out loans against their investments at low interest rates. Since loans aren't considered income, they don't owe taxes on the borrowed money. Die. When they pass away, their heirs inherit the assets with a step up in value, meaning they don't have to pay taxes on previous gains. Take, for example, a billionaire worth $100 million in stocks borrows $20 million against them to fund their lifestyle without selling stocks or paying taxes. Upon their death, their heirs inherit the stocks at their new higher value, completely bypassing capital gains taxes. Leveraged buyouts. Buying companies with borrowed money. Imagine owning a multi-million-dollar company without spending much of your own money. Sounds impossible? Wealthy investors do it all the time using leveraged buyouts or LBOs, a strategy that allows them to buy businesses primarily with borrowed money. Here's how it works. A private equity firm finds a company worth $50 million. Instead of paying the full price, they invest just $10 million of their own money and borrow the remaining $40 million. Now they control a valuable business while keeping most of their cash free for other investments. The real profit comes later. By making the company more efficient and increasing its value, they sell it for $100 million. After repaying the debt, they walk away with a massive profit, all while using very little of their own money. This is one of the most powerful ways billionaires and investment firms build massive fortunes. Why the wealthy take on debt and risk. The wealthy understand that taking on debt is a calculated risk that can lead to huge rewards. Here's why they embrace it. Instead of spending all their cash on one investment, they use leverage, borrowing money to control larger assets while keeping their own funds free for new opportunities. This is how they build massive real estate portfolios, acquire businesses, and invest in high-growth ventures without draining their savings. Another advantage? Low interest rates. The wealthy don't borrow at the same high rates as the average person. They get access to cheap money, which means they can invest in assets that grow at a much higher rate than what they pay in interest. And let's not forget tax benefits. Many types of debt come with deductions that reduce taxable income, helping the wealthy legally pay less in taxes and keep more of their earnings. Perhaps the biggest reason they embrace debt is cash flow preservation. Instead of putting all their money into one deal, they borrow strategically and keep cash available for the next big opportunity. This way, they always stay in the game, ready to seize the next profitable investment. Of course, debt comes with risks, but the wealthy don't take blind risks. They only borrow when they know their investments will generate more income than the cost of the loan. That's the difference between bad debt and smart debt, and it's a game changer in building wealth. Real-life examples of wealthy people using debt. Leveraging debt has been a pivotal strategy for many successful entrepreneurs, enabling them to expand their businesses and create their wealth. Here are 3 notable examples. Robert Kiyosaki. Robert Kiyosaki, author of Rich Dad, Poor Dad, views debt as a tool for wealth building. He distinguishes between good debt, borrowed funds used to acquire income-generating assets like real estate, and bad debt, used for liabilities. By utilizing good debt, Kiyosaki has expanded his investment portfolio, contributing to his financial success. Larry Page. As co-founder of Google, Larry Page strategically employed debt financing in the company's early stages. This approach facilitated rapid expansion and innovation, allowing Google to scale effectively while balancing leverage benefits with maintaining control over the company. Sarah Blakely, founder of Spanx. Sarah Blakely used personal savings and debt to finance product development and marketing in the company's early days. Her calculated investment in her vision, even through borrowing, was crucial to Spanx's growth and success. These examples illustrate that, when used thoughtfully, debt can be a valuable instrument for entrepreneurs aiming to expand their businesses and increase wealth. Most people avoid debt because they associate it with financial struggles. However, the wealthy use debt as a powerful strategy to create wealth, invest in profitable assets, and minimize taxes. By understanding the difference between good debt and bad debt, anyone can start using debt to their advantage. Whether it's real estate, stock investments, or business expansion, debt can be a stepping stone to financial success if used wisely. Would you rather fear debt or use it to build wealth? The choice is yours. If you like this video, like and subscribe to our channel for more interesting content like this. See you in the next video.